Okay, so I mean, first off, I guess, do both of you know what I guess, do you guys know much about stocks or not? Maybe not as much. Fine. I mean, so basically, not much. That's fair. Okay, so I mean, first off, we're gonna start off with what an uptrend is and what a downtrend is, just to kind of get an understanding of, the way the market moves. Okay, so we have an uptrend. What Oh, so we have an uptrend, right? So all that means is we create higher highs and higher lows. So kind of like the basics, right? So you can see here we have this high, then we have this low. Then we put in another high, we put in another low. And each low after the previous one is higher, right? So we see that, okay? Downtrend, same thing, but to the downside, right? We have lower lows and lower highs. So it's kind of a choppy downtrend, but that's kind of the idea, right? So lower lows, lower highs. You can see this, okay? And then you want to identify, usually when you're trading, you want to identify whether the market currently is in an uptrend or in a downtrend. So in this case, we can clearly see on the daily time frame, which just means each candle we see here is like the data that happened or the way price moved that day, right? So we see we've been in an uptrend. We've just been going up, right? We've been making higher highs and higher lows. So we've been in an uptrend, right? So that's first off. Second of all, you want to identify when you're in that uptrend and downtrend, you want to identify levels, right? What's VWAP? So that's I think it's volume weighted average price, right? But I don't really use that. Um Volume weighted average price, not really necessary per se. Um Honestly, all you really need when trading is being able to understand what price is doing, right? So just being able to read price action. So let's see. We have levels, right? Levels, all they tell you are areas, they're areas of interest, right? So you can see there's this high right here, and there's, say, these lows right here. Okay, so we have like these right here that kind of always price comes down, bounces off, comes down, bounces. So in other words, others would say this is support, okay? And these people would say this is um, like resistance, right? So all it is, support and resistance. Um, and then you always, okay. So I guess let's just start off with kind of an example as to like a potential trade that I would take, okay? And then let's kind of build backwards. So this is an actual trade I took. So I took on live, I took this trade right here. So you don't really have to worry about this right here. So this is just after hours. So for me, it's the hours after market open. I mean, after market closes. So for me, it's Pacific time. So it's from 1 p.m. until roughly 5 p.m. And then the yellow for me is pre-market. So from 1 a.m. to basically until market opens, right? So all that means is the way the price moves before market opens or outside of market open hours. So here, what I'm going to show you is we're on the 5 minute time frame, okay? So that just means this is a 5 minute candle, this is another 5 minute, it's another one, right? The way I trade is I trade you could say 15-minute opening range. So what that is, if you were to let me replay this. All that means is you mark out highs and lows of the first 15 minutes of market open. So in this case, this is the first 5 minutes. This is the second 5 minute right there. And then that's the third one, right? So in that case, we already have this high right here. That's the high of day, you could say, right? That's the first 15 minutes of market open. That's the highest that price went. And then we have this low down here. So in the next candle, you'll see it marks it out, right? I just have this indicator so I don't have to manually mark it out, right? Then all we do is wait for price to break that. So in this case, we see we're still inside of the range. So price doesn't really know what it wants to do just yet, okay? And let me remove these hours because you don't really need them, okay? So yeah, we have this high and this low, right? So what do? We just wait, okay? Still inside that, still, okay. We broke through that, right? So you can see this is a high. So this was basically a level, meaning once we break that, that means this level becomes, in a sense, invalid, you could say. And so all I did was use a fair value gap. You might be asking yourself, what is a fair value gap? So a fair value gap, all it is an area of imbalance. So in this case, it's a bullish fair value gap, meaning there's more buyers than sellers. Because you have to think about every candle kind of shows you or tells you a story, right? It's like in this case, this candle tells you, okay, price opened up down here. Because green candles, the way they work is, let's see, let me see if I can show you this. So this is a uh, okay, this would be a green candle, right? So basically all this tells you is, sorry, this is pretty, we're gonna work with it. So this tells you how much price, how high price went up, which is up here, and how low price went in that first, in that like body candle, right? So in this case, say this is a 5 minute candle. So this is a 5 minute interval. So this is the highest that price went in those 5 minutes, and this is the lowest price went in those 5 minutes. Those are what the wicks tell you. Now say this is a green candle, right? So say this is a candle that, a bullish candle, meaning it's going up, right? So let's mark it out green. So if it's a green candle, let's say it's a green candle, then all this means is price opened up down here at this low, and then the highest it went was up here, but at the end of those 5 minutes, this is where the candle closed, right? This is where price closed. So that's the green candle, and then vice versa, the red one would be the other way around. It'd be the opposite. So show that real quick. So in this case, this red candle. So all this tells you is, again, price. This is the highest it went up here. This is the lowest that it went. This is the price at which the 5 minute candle opened up, and then this is the where price ended up closing out after that 5 minute interval. Okay, that's just kind of the basics of that. I don't know if any of you um know or don't know, so just wanted to get that out the way. So in this case, we have a green candle here, and you can see what a fair value gap is, right? That just when there's more buyers than sellers, or if it were to the downside, just like say this one right here, that means there's more sellers than buyers, right? Sorry. So now that we have that out the way, in this case, the way I use it is think of it this way. We have a lot of orders here because there's just more buyers and sellers. So now price isn't always going to fill these orders immediately. Some orders are going to remain unfilled. So what is price going to want to do? Come back down, fill some orders at those prices to continue up higher, right? To continue up higher. So what can you expect? Price to come down here and then just bounce, right? And the way you know, in a sense, that it's going to bounce is because you have this strength here. You have this imbalance, meaning there's more buyers and sellers, and yeah, you're breaking through this level, which you could say was resistance because this showed that price didn't want to go above this during the first what 6:30 to 6:50, the first 20 minutes of market open. So what do we do? For me, since we're on the 5-minute time frame, we just wait for a retracement, and our entry, full entry, is here at this fair value gap at the beginning of it, and then our stop loss would be halfway, or you could do the full fair value gap. It really depends on like your risk to reward. So we wait, we're waiting. Okay, you're in full position here, full position still. What do we get? A little push. That's good. We're still waiting. And we just let it play out, right? And boom, what happens there? You just target. So I forgot to mention this, but when you're entering a trade, you have your entry, you have your stop loss, meaning if price, the candle that you're so say you're on the 5 minute time frame, the you want to wait for a candle close below your stop loss, which here we never got, right? We never got a candle close below here, so you're still in, you're still waiting, and then all you do is target previous levels, previous areas of interest, you could say. So in this case, I'll mark it out. We have this one right there. We also have this one here, right? And that's, that's kind of it. And all you got to do is be patient and wait, right? So you could have easily also taken this off like 3 minute or any smaller the time frame, but you have to remember that the higher the time frame, the stronger the move. So in this case, this 5 minute interval, this 5 minute fair value gap is much stronger than if we were to go down to the 1 minute time frame and we found, say, a fair value gap like right here. It's much stronger. Like this 1 minute fair value gap right there, that one, you can see price just went through it, right? It just went through and we went lower. So that's kind of the gist of it. Always remember to stay. I don't trade anything below the 3 minute. So in this case, the reason I didn't trade the 3 minute fair value gap here was, for one, it's kind of small, right? We have this big move here. We have another fair value gap down here. And so it's like, which one do you want to trade, right? And you don't know which one. And if you don't know which one, you just use the fib, right? So the fib, sorry, I'm like kind of going all over the place. Stop me if you guys have any questions. But the fib, all it tells you is kind of the area where price will be most likely to retrace to is the 0.5 level of the fib, which is equilibrium, right? So it's like just kind of where price usually wants to pull back towards. So in this case, after this move, you can clearly see, right, there's a big move from down here, from this low to this high right here. And so price is most likely to pull back to the halfway of that, right? And so this fair value gap, yes, it falls in line with it, and so does this, but the better one, the one that's just easier on like the eyes, you could say, is that one. And that one would help you basically stay in the trade because it wouldn't be invalid. Yeah, I'm on TradingView. This is TradingView, yeah. What's the fib? So the fib, it's just, do you pay for it? I do. You don't necessarily have to. I pay for it just because I tend to watch more than one stock like at a time, and I find it easier. And also, it's better to if you pay for it, you're able to use the replay mode, which lets you kind of go back in time, back test, meaning just practice like on what price has done before. That's kind of the way I use it. Uh, Especially when you're beginning, like starting out, I feel like it's a good investment. Maybe not. Don't pay like the yearly or anything crazy like that. Just like the one upgraded after the basic one. That's what I. But I would definitely just wait until like there's like a promo code or like some sort of discount or sell because it could be pricey. But I think it's a good investment so that way you can backtest. Did you paper trade for a while when you started? No. I should have, but and people told me to, but I said, you know what? Let's just get into it because I knew at the end of the day, yeah, I was gonna lose money, and so I was like, might as well get over the kind of get into it and get kind of hands on experience losing money slash making money, um, in a sense immediately, you can say. So I was like, you know what? Let me just do it. Um, I wouldn't recommend though doing that just because you can lose a lot more money than you need to. I would definitely say start off with paper trading if you have like little to no experience. Just start off paper trading, get a feel of like how to execute these trades. So like with paper trading, you can like on Webull basically pretend like you're actually gonna enter, right? Enter a trade and whatnot. So yeah, the fib, all it is it tells you where price is most likely to come back and retrace to, like after a move, because obviously price can't just keep going up, 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 right? Price price isn't always just gonna go up, up, like without making any sort of significant retracement, right? It's not just gonna go parabolic. It has to somewhat retrace, just because there's it doesn't really make sense for it to continue to go up higher because you need liquidity, which is essentially kind of like the money in the market. You could say it's like um people's orders need to get filled and whatnot. Um, do you analyze pre-market? Yes, I do. Um, I do, and I feel like that's something I've learned to do, and it's more like it comes with experience, right? But right now, all I'm kind of showing is the way I trade in terms of with the fair value gap. But when it comes to pre-market, that's like an extra step ahead, which I can show. So when it comes to pre-market, see, when it comes to pre-market, the way you could say, trade pre-market is, or like analyze pre-market would be, okay, we have just this move in pre-market, right? We just kind of chopped around, right? We didn't really do much. So to be honest, there's not much you can do because if anything, I would use pre-market if say we made a huge move down overnight, and then in pre-market we continued that move down. Well, obviously price isn't gonna always go down, right? It's not continuously gonna go down. It's going to retrace, make some sort of retracement. So that's where I would use the fib and determine like whether or not where price is gonna come back to, right? So let's take an example as like right here. This is a good example. I think I took this trade as well. So here, pre-market is this right here, right? And then it goes from basically from here all the way to, all right, I'm gonna basically it goes from here all the way to right here, right? And we made a huge move down, right? So from here, this high, we made a move, and this is the low. So the way I would use this is, okay, we made a move from up here down here. So price is most likely to retrace somewhere around these levels right here, right here. But what do we see? We see an in price just rip through. So the way I would use that is, okay, I would first zoom out to the 15-minute because the higher the time frame, the stronger the move. I'm more confident trading the 15 minutes rather than like um the 3 minute or like 1 minute. So here I would see, okay, we have pre-market move downwards. We have a 15-minute fair value gap here. We have another one here. This is a bit more like, it could be overwhelming. What's up, Alejandra? So this is a bit more overwhelming, but so feel free to stop me if you have any questions. But we have a 15-minute fair value gap here. We have another one here, and we have another one up here, right? But this is the area of interest, the halfway, the equilibrium of the move, right? The 0.5 level of the fib level. So once price rips through that, what does it tell you? It doesn't want to bounce off of this, right? It doesn't want to just respect that and go lower. So it tells you what? It's bullish. So what do? You just wait for a retracement towards that, and then you play the upside. So what I would do, or what I did, I think it was this trade I took, is I waited for a retracement. So we have right there. And then, okay, we have a retracement, right? Once market opens, we have some sort of retracement. So all I'm doing is waiting for a price to kind of come back lower. And what you could do is put your entry here and simply target like the highs, the recent highs, right? But say you never get a full retracement down to it, right? That's okay, because you can just always wait for price to come back down. Just like you never have to chase, don't ever try to chase a move, because price will inevitably come back down, right? So you can see here, yeah, price came back down, right? And you could just scalp it. Obviously, it's not always going to make a move back up higher, like all the way to those highs, but you could always scalp a move. So that's a way to use it. I don't really use that because, I mean, we see this is like 3 hours into market open, so I wouldn't really trade this. But what I would have taken is something right here off this pullback. I would have just waited for price to get somewhat near, so I wouldn't have gone in heavy. So sorry, I'm saying like a lot of things, right? First off, the way I trade is I average into my positions. Say I want 4 contracts, okay? And I want to start adding before we get to this because I don't want to miss the move, right? So I add maybe 1 contract somewhere here, and then I want to average in, so I would buy like 2 or 3 more down here where I want my full entry, where I want my full position. So I would maybe add 1 here and just wait until price comes down here. But since price never comes down here, what does that mean? I just enter with 1/4 of my position, one contract, and then price just rips, right? And all you would do is target like these highs up here. Why? Because it's just previous areas of interest, previous, it's just support and resistance, right? So here you could expect price to react towards this and push back down, or just push up higher. And what happens? We come up a bit and then we push back lower. Force chat. But let's see. Let's Was that today? No, this was not today. Today I didn't take a trade. Um, I was in a swing today, but that didn't. Uh, it played out the way I wanted to, but I just didn't have the time on my contracts to like be patient and hold. So, unfortunate. I lost like $15 today. Let's see if we can find another setup. You train tomorrow? Yeah, I'm live training tomorrow in the morning. So you guys can tune in for that. Let's see. I was going to show you guys. Hold up. So let's go, coach. Yeah. Let me know if you guys have any questions. It's kind of a lot between swing trading. So swing trading, it takes a while, much longer. It takes. I wanted to swing silver today. I'm not gonna lie. I thought about entering a contract, but I just stopped myself because I was like, let me not do that. So swings, okay, I'll show you swings because I do day trading, a little bit of swing trading, right? But let's see. So with swings, we're going to check out um stocks that tend to move better, right? Tend to move higher, like higher percentages per day because you those are the type of moves that you want to make money, right? So I'm gonna take a look at this, right? So this is ASTS. This is actually a play I sent into the Discord a while back. It was I had entered some shares down here because of a swing, uh, like swing potential, right? So this is where I entered. Um, let's see. So first off, you want to identify a trend, right? In this case, and you always want to stick to the higher time frames. Anything like 4 hour and above. So 4 hour, daily, weekly, those are good setups, right? The higher the time frame, the stronger the move. So what does that mean? Once we any levels that are broken are just prone to move much smoother and with much more strength. So in this case, we see clearly. Let me remove these EMAs because it could get confusing. We clearly see a downtrend here, right? We see a downtrend, and so what do we wait for price to do? Just break this downtrend up to the upside, right? And so the way I use these EMAs is I make sure that when I'm taking a swing, I want the EMAs to be a, so I want the 10 EMA to be above the 20 EMA because that indicates that we're bullish, right? And or we're in an uptrend. And when the EMAs cross over, so in this case the 10 EMA, which just means the 10-day moving average, crosses over to the 20 EMA, which is a 20-day moving average, all that means is we're kind of coming into a downtrend and you see price fall below it, right? So that's a downtrend. But once we're able to flip above these EMAs, which is kind of what we started doing here, then that just means we're reversing and we're coming back into an uptrend. So the way I would have taken this trade is if we break through this right here. So we have this downtrend and we're kind of consolidating here. We have this level right here. This level here. We didn't quite break through it yet, right? So still waiting. Then we wait. So let me go into replay mode and show this day right here. So this is kind of what you see at the time, right? And once you have that, okay, now you're waiting for market to open, right? So you're just waiting for market to open. And what you want to see is price with momentum, with like volume. You want price to break through this level that you have marked, which in this case I use previous day high. You want to see a breakthrough with momentum and above the EMAs. So let's see. Okay, not yet. Nothing there. It just shows we're rejecting, right? Nothing much. Not yet. Nothing yet. I still don't see any entry because we're still hesitating to break through this level. And then boom, we get this, right? We get this candle close above this level. We are riding on these EMAs, meaning, you know, we're using them as support, you could say. And now you just look for your entry, which is once the candle closes, you set your entry there. Your stop loss goes to above, like about low of day, or maybe according to your position sizing or to your risk, around 20 to 25% of a stop loss. And what do? You zoom out to like higher time frames and just target these previous highs, right? So let me say a high right there. And all you do is target those highs. What does that give you? A 1 to 2? But there's a lot more highs. And so with swing trading, you have the potential to make a lot more money in terms of like you can get 100% to 200% gainers and whatnot, and like a lot more. And I didn't personally take this trade, but what I did do was enter shares, right? And that's kind of this was the idea. I knew we were gonna break out. I knew we were gonna target back to all-time highs, right? And so maybe options I just missed it, but shares we're still gonna play out, right? So sorry, I'm like moving it around so much. So now we have that entry, and all we do is wait. Let's see if we ever get stopped out. By stopped out, I mean, we fall back below this and break through this low of day. But what's going on? We're holding on onto the EMAs pretty nicely. Okay, maybe we're coming back to stop loss area, but it really depends. Like, you can't get spooked out, and you really won't if you are for one, positioned accordingly, so you have good risk management, and you didn't just put money you can't afford to lose, and two, if you're just patient and you have time on your contract. So it's like a couple of things that you kind of have to check off. Make sure you get time on your contracts, because with swing trading, these trades can take a few days to a couple weeks. So it really depends on, you know, whether you want to swing trade or day trade. It depends on how fast you want the trades to play out. So in this case, you see we're still in, right? There's no stop loss, no nothing. Like, we haven't gotten stopped out, I should say. Exactly. Depending on what platform, what time frame you're using, sorry. And so you see, we're absolutely ripping, right? And market closed right here, right? So we're gonna set, that's when market closed, and then this is new market open, right? So you see, you want to hold your trades for as long as you can. Here at this level that I have right here, that would have been your first take profit, okay? But you want to target other levels and hold your runners. So those are what runners are. Runners just mean you are holding on to a bit of your position. Will this be posted on YouTube? Yeah, I got you. I'll post it. I'm recording right now. I really hope it's recording well, because I have not recorded something like this. But it should work. But yeah, and then hold your runners. Look at this position. This position went crazy. Why? Because that's the power of swing trading. Like, you have all these levels. You can even target like previous, like all-time highs, right? Which is kind of what we did with our shares, which I'm still holding, by the way, because we already made a new all-time high, right? I'm still holding. But you see all these levels, these are just targets. So now let me just let it play out, because obviously we know what happened, right? We continue going higher. And of course, if you miss that first trade, that's fine. Why? Because um, because we can always have another entry. So here, you start seeing this, right? We kind of slow down. We start consolidating. So all that means is we're setting up for another potential swing, right? So where's that? Like right here, we set up for another potential swing. I could go more into depth actually, because I feel like this is kind of really broad. But does that make sense? Princess motion. Let's see. Okay, cool. So yeah, essentially, you want to find a trend. Say we're in this downtrend right here. Price is kind of coming down. It's not always going to be perfect, but say price is coming down, and then we start seeing something like this, where price just consolidates, right? Which means price doesn't really know whether it wants to go any lower, right? And so what do? You don't predict, you just wait. But now, when you see price starting to creep up higher, that's when you're like, okay, the downtrend is over. Now, what are we going to do? Target these previous highs. And that's just kind of how the market works. We target previous highs, previous lows. Why? To have money continuously moving in the market. Liquidity. Usually with the sweep. Yeah. You should do a class, Zazu. Yeah. That's swing trading. But yeah, with day trading, it's a bit more you stay on smaller time frames, and um, they're more like quicker trades. You said that as it was. Yeah, exactly. Nice. But yeah, let me know if you have any questions, Princess Motion. If not, that'll probably be it for now. Kind of a brief overview, but yeah, with these stocks that you swing trade, you always want to look for stocks that move, right? You don't want to just be in a stock that moves like $1 per day. So how do you find that out? You look at the average daily range, which is the ADR. So it's this what I have down here, and you can see the ADR, so the average daily range, meaning on average, how much does the price of this, or how much does the stock move? This is a 10% ADR. So this is really good, right? Because that means once you get these breakouts, you will get a strong move, right? Kind of that. But yeah, for now that'll probably be it. Let me stop the recording here.